Thanks for choosing UFX, where trading makes sense. In this video, we'll talk about the pros and cons of online trading, or building platform tools to help you minimize your risk, such as trading on margin, news and risk alerts, and other unique UFX features designed to help you protect your funds. Let's go over some of the ABCs of trading terms and learn how a trading account works. Trading online means trading CFDs. CFD stands for contract for difference. In online trading, this means trading on the value of a financial asset between the time the contract is open and the time it is closed. Traders can earn money on the difference in price during that time. P&L stands for profit and loss. This shows the amount of money you are earning and losing on open trades in real time. Balance is the real exact amount of money in your account. Equity is actually your account balance plus your P&L. It's a picture of your potential account balance if you were to close all your open positions right now. Used margin is how much real money you have invested in your open trades. Free margin is the amount of money you have left in your account to open new trades. Pip value. Pip is the common nickname for the last number after the decimal point in a currency price. In such a volatile market, each decimal change can lead to great profits, but also losses. The basic calculation is pip in decimal places times the trade size equals the pip value. Here's an example. Let's say you decide to buy the euro-dollar pair. You open a trade size of $100,000 and you double it with 1 pip, which is equal to 0.0001. Then your profit will be $100,000, which is your trade size, times 0.0001 equals $10. If you bought $100,000 of the euro-dollar pair and the pair went up from 1.0768 to 1.0793, a 25 pip change, then you would gain 25 pips times $10 equals $250 profit. If the pair decreases from 1.0768 to 1.0748, a 20 pip change, then you would lose 20 times $10 equals $200. The financial markets are constantly moving, and at UFX, we believe the more you're informed, the better a trader you can be. We want to help you get there. News like political events, natural disasters, conflicts, and economic sanctions can quickly affect the markets. For example, on June 23, 2016, the UK public voted to leave the European Union. Within days, the British pound declined to its lowest value in 30 years. Also, after the November 2016 US presidential elections, the US dollar surged to record numbers, its highest value in almost a year. Major events and news announcements like these can cause the market to react strongly. When this happens, it's possible for slippage to occur. Slippage is the difference between an asset's expected price and the actual price. This can happen very quickly, sometimes even overnight. A responsible trader knows how to manage risks like slippage. UFX offers technical tools like charts and real-time alerts, but ultimately, it's up to you to stay up to date on the market, news, and worldwide events. You've got to pay attention. One of the most common online trading tools is leverage. Leverage is borrowed money you can use to trade at higher volumes. Think of leverage as a loan. Let's say you want to invest in real estate. You buy a house for $10,000. As the local market changes and housing prices go up, you decide to sell it for $10,500. You've now earned a $500 profit. That's great, but it's not a lot. Instead, you decide to buy a house for $100,000, but you don't have enough money. The bank lends you $90,000, and you add in your investment of $10,000. When you sell the house for $105,000, you earn a $5,000 profit. Trading with leverage works in a similar way. In essence, leverage is a loan from us to you, allowing you to increase your earning potential. Let's say you have $1,000 in your UFX account, and you open a trade with 50 to 1 leverage. This means the value of your $1,000 trading position becomes $50,000. We get this amount by taking your capital, $1,000 in this case, and multiplying it by 50. You still have risk, which is your original $1,000, but you also have a greater chance of earning or losing money on the trade. UFX has a number of alerts built into the trading platform, notifying you of potential risk to your trading activities. Equity drop alerts. When your equity decreases to a low level where 75% of your account equity is at risk, we'll notify you by text, email, and with a trading platform alert asking you to monitor the trade and take action. When you receive an equity drop alert, you will have a few choices about what to do. Close all losing trades, close all the profitable trades, or add funds to your account. The goal is to make your account as stable as possible, which can more easily avoid high risk. Each option will help increase your account's equity so you have more to back up your trades. Margin call. In trading, free margin is a portion of your account equity that's set aside to cover the cost of your trades. If your open positions go down in value and your free margin amount is not enough to cover the trades, UFX will issue a margin call. This is a notice we'll send to you letting you know that either your margin is too low for your open positions or at least 96% of your account equity is at risk and your trades could be closed. We'll suggest that you either close all of your open positions, close just the profitable ones, or add funds to your account to increase the margin that covers your trades. Stop out. If your margin drops to a level where it is unable to cover your open positions, the trades will be closed automatically. This feature protects you from incurring additional losses. You then have the option to either manually close your position or deposit more funds. We talked about the different built-in features and risk management tools UFX has in place, but it's up to you to take action. UFX has several tools to help you achieve this. Stop loss. This feature closes a position when a trade reaches a predetermined amount of loss. Let's say that you want to open a buy position on the Euro-GBP currency pair. You may decide that you want your position to close after losing 30 euros if it's going against you. This is the amount you're willing to risk. Take profit. This feature closes a position once a trade earns a predetermined amount of profit. For example, if you've bought some shares of Facebook stock, you can instruct the UFX platform to close the trade once it has earned a profit of $50. Manual closure. The ability to manually close your positions all at once is a totally unique feature of the UFX platform. Our focus is on our clients. So we've created a feature to close all open positions at once with a single click. When you want to close a trade for whatever reason, you can close a single trade, all profitable trades, all losing trades, or all positions. It's totally up to you. So, when trading in the financial markets, you've got to be constantly vigilant and on top of current events. Yesterday's price increase may be today's market downturn. Use the risk management tools we've talked about to help guide your trading strategies. Ultimately, it's your responsibility to remain informed and aware of your account activity. After all, it's your investment we're talking about. UFX is with you every step of the way and encourages you to be in touch with us. Okay, you're all set now. Feel free to review everything we've discussed and reach out to us anytime. We wish you a positive and successful trading experience.